This is Matthew Cratter from Trader University, and today I want to talk about the collapse of the US dollar and what it means for you. If you're interested in learning how the financial system actually works so you can position yourself correctly and protect yourself and your family, or you just want to see what I'm trading and investing in, be sure to hit that subscribe button. So I've been getting a lot of questions about the US dollar and its implications for the stock market and everything else. So I wanted to do a video on the US dollar collapse, whether it's slow motion or fast. But I think we have to distinguish between the different kinds of collapse. First of all, there's the exchange rates between the US dollar and other fiat currencies, other paper currencies. This is what we call currencies that are just sort of created out of nothing. They're not backed by gold. There are no currencies that are backed by gold anymore in this modern financial system. But what we've been seeing is that the US dollar has been weakening over the past year. This is the DXY, the DXY. It's a currency index that's, I think it's overweighted to things like the euro, but it basically shows you how the US dollar is trading against a basket of other foreign currencies. When this chart goes up this direction, the US dollar is strengthening. When it goes down this direction, the US dollar is weakening. And you can see that since really the peak of the COVID crisis and the sort of liquidity crisis we experienced, the US dollar has been weakening against a basket of other currencies. If we dig in, we can see, if we look, for example, at the euro versus the US dollar, we can see that it's the euro strengthened significantly against the US dollar over the past 12 months. Australian dollar, I could go through and show you all of these. Some of them, I think the Japanese yen, US dollar is back about where it was a year ago. But the basic point here is that you have all these fiat currencies. You have euros, you have yens, you have Australian dollars, you have US dollars. And my take on these is that these are all sinking ships. Now, there are lots of people who like to debate which is the best ship. Brent Johnson in Dollar Milkshake Theory, you've probably heard about, talks about the US dollars being the safest ship and where all the liquidity is eventually going to flow. I think he's wrong, and I think the problem is when the US dollar strengthens, it blows up a lot of things, and the Fed's going to print, it's going to weaken the dollar. But either way, it's not really a discussion I'm that interested in, because these are all paper currencies. These are all fiat currencies, and U.S. dollar might be the Titanic. It might be the safest ship around. But the main point I want you to take away from the beginning of this is that all fiat currencies are sinking ships. They're always devalued over time, and eventually they fail. Now, the U.S. dollar is the world reserve currency. I don't expect it to disappear anytime soon, but we still have this situation where the US dollar is weakening along with all other currencies. And the relative rate of weakening can be seen in a chart like this. If the US dollar is weakening faster against a basket of currencies, you really get this downward movement here. But I think the really interesting thing, and I should say that all fiat currencies are sinking ships. Some are obviously worse. Lebanese lira has collapsed this year. Venezuelan bolivar. Some of these lose their value even overnight, that you can't store any wealth in them. If you get paid in Lebanese lira or Venezuelan bolivar, you need to immediately buy food with it. You don't want to hold it overnight. You certainly don't want to put it in a bank or anything like that. And so we have all these fiat currencies, and I want you to envision them as sinking ships. And then we have the US dollar collapse versus other things, real things in the real world. And that's really what I'm going to focus on here and sort of talk about what's been happening. So obviously we have the dollar weakening, etc. What's very interesting is that gold has been rallying in all these different currencies. So it looks like this just refreshed, but gold is basically up about 28% in euros. It's up in Swiss franc. It's up about the same amount in Australian dollars. Gold has been rallying across all these currencies. Obviously, gold has been rallying as well in US dollar terms. We're hitting new highs as I'm recording this. And what this means, this is one way of showing that all these fiat currencies are sinking ships. They're sinking, which means that the price of gold denominated in those currencies is going up over time. So even if the US dollar were to be the strongest, it still is a slowly sinking ship, and gold priced in US dollars goes up over long periods of time. But what's really been happening in the US really is we had a crisis in the repo market in the third quarter of 2019. And what was basically happening is the Congress, the federal government, were spending so much money. They were running such giant budget deficits, in other words, spending money that wasn't covered by tax revenues. And there were so many treasuries being issued that it basically overwhelmed the system. There was no balance sheet left for it on hedge funds or in U.S. banks, and there was even no way to. It sort of overwhelmed the financing, the repo financing of it as well. And so what happened is the Fed, which had been slowly shrinking its balance sheet, and we can see that shrinking that was really happening over 2016 until the third quarter of 2019. These are basically, this shows what the Fed has printed money and bought. They usually buy treasuries and munis, and they've recently been buying even junk bonds and corporate bonds. What they were trying to do was shrink their balance sheet in 2018, 2019. But what happened is when this repo crisis hit, they were forced to start printing money again and to buy treasuries with them to ease all the strains in the financial system. Basically, the whole system was choking on too much government debt, too many U.S. treasuries being issued to fund these giant U.S. budget deficits. And so what happened is the Fed began to print money, which devalues the U.S. dollar. If you have more U.S. dollars, each one is worth less. And that's really what's been showing up in the markets. Even before the COVID crisis, the Fed was printing. They were expanding their balance sheet, even going into even before the March 2020 liquidity crisis, which hit. And so I think one way of looking at this, the interesting thing is that balance sheet sort of bottomed on August 28th, the week of August 28th, 2019. Right now we're on August 4th, so approximately a year later. So I thought I would look at the purchasing power of the US dollar versus real things. Obviously, we know it's been weakening, as we saw. It's been weakening against other paper fiat currencies. But it's really interesting to see how it's been weakening over the past 12 months in terms of its purchasing power of other scarce assets. So gold was trading at about $1,500 an ounce a year ago. Now it's above $2,000 an ounce. Silver was at $18 an ounce. Now it's at $25 an ounce as I'm recording this. The S&P 500, here's another one, SPY, which is the ETF. You could buy this little basket of stocks, one share of SPY, for $288. Today it costs you $328. Bitcoin a year ago was at 9,700. Today it's above 11,000. So what this shows is that not only is the US dollar losing power and being devalued against other currencies, as this chart shows, but the US dollar is losing its purchasing power. It doesn't purchase as much as it did a year ago. The same amount of dollars will not get you the same amount of gold, silver, stocks, or Bitcoin. I went back and looked at my Amazon account too. You can do this yourself and see if it makes sense. A year ago, I bought 6 rolls of Scotch tape for $9.49. Today, that same package is costs $10.99. So there's another example of the US dollar being devalued versus Scotch tape. This is a fancy way of saying that there is inflation in the system. Now it's unevenly distributed. It's mostly the inflation is showing up as asset price inflation, as wealthy investors, institutional investors try to find a way to store their wealth and protect it from the ravages of money printing. But it's showing up a little bit in terms of consumer products, etc., like this example of Scotch tape. I looked up another example. I was going to do toilet paper, which I thought was too extreme. It seems to be a little easier to get now, but not quite as easy. But even something like paper towels, a year ago, we bought 12 of them, which was really equivalent to like 30 rolls. These are the very dense rolls for $30 roughly. And right now they're not even available, whether this is because domestic factories have shut down or running slowly because of COVID, or sort of supply chain issues having to do with the conflict with China or COVID in China as well. You have the same effect, though, that not only are asset prices going up as priced in dollars, but some things are not even available. That's the worst form of inflation, when you can't even, when it becomes true scarcity, you can't even buy paper towels of a certain brand if you want it. This is also showing up in quality real estate, places like LA. I just picked Studio City as a kind of a nice area as an example. Obviously a wealthy area, median price, $1.3 million. But this is up 10% year on year. And what this means is it doesn't necessarily mean that You can look at it two ways. Housing prices went up in this part of LA, or the US dollar went down versus prices. I would say the US dollar going down really makes a lot more sense, simply because things have not been that good over the last 12 months. Obviously, we've had the repo crisis, the COVID crisis, etc. And yet we see this really strange phenomenon where all asset prices are going up. Obviously, there's certain pockets. Manhattan prices are going, real estate's going down, etc. There's kind of an outflow to places like Boise, Idaho, and Denver, and Austin, etc. There are these kind of effects, but we haven't had a housing crash. Instead, we've seen scarce assets like real estate, Bitcoin, stocks, gold, and silver all rally. So what I suggest is that we're in the early stages of a currency crisis where the Fed is going to have to continue to print, and they're going to print basically until the US dollar is no longer the world reserve currency. There are already a lot of strains on the system. Having the world reserve currency has been sort of a mixed blessing for the US. It's enabled it to basically print money and buy bombs and buy airplanes and buy crude oil, which can be good for national defense. It can be very bad because there's this incentive to have lots of wars. But the US has also had to outsource its whole manufacturing base. This has created a lot of class warfare as the whole middle class has been hollowed out, and you basically have a working class where the wages have not kept up with inflation, and then you have an upper class that's chiefly in finance and call it high-tech, software, etc., that are getting richer and richer versus everyone else. So there's an instability that comes with having the world reserve currency, and the Fed is really between a rock and a hard place. There's no one else on the margins to buy these treasuries, so they're going to have to continue to print money and buy treasuries, stick them on their balance sheet. And what this means is that asset prices will continue to go up. Maybe we see a blip in August and September. We see like a mini crash in stocks. Something like that could certainly happen. August and September are well known for these things. But I think that the real path here is upwards. And it's not because times are so good, but it's because times are very bad and the Fed has to print. Obviously, there's a lot of innovation happening in high tech. You have companies creating software and creating high tech products that allow one to do more things with less. This ultimately means you can lay off more people, etc. So it's a mixed blessing, but it does mean that tech stocks have a tendency to perform really well. And scarce assets like real estate, gold, Bitcoin, etc. So that's what I think is happening. I don't expect the US dollar to be devalued overnight, but this is basically if you are trying to grow your portfolio, grow your savings. If you're holding anything in bonds or cash, you are slowly being devalued away by the Fed printing. The US dollar is a sinking ship along with all the other currencies. Maybe some of those other currencies sink faster or slower. Things like the Swiss franc seem to be a little bit more stable because there's the impression of a smaller, more well-run economy that has some gold as well in their banks, etc. Sort of a safe haven within Europe too if something happens to the euro. But I'm agnostic about one currency versus another. Where I think the real upside is in gold and Bitcoin. And rather than playing currency pairs and trying to lever up and find these little moves, when you use a lot of leverage, you can also lose a lot of money as well as make a lot of money. I like trades like Bitcoin, where the most you can lose is 100%. The worst that can happen, it can go to zero. But I'm expecting Bitcoin to be above 100,000, probably above 200,000 by next summer. And so if you're bearish on stocks, if you're bearish on gold, if you're bearish on tech or bearish on Bitcoin, you have to have a good answer. I might be wrong about this, but you got to think through it really closely. Why isn't this true? I think everything's going up. All these prices are going up because the US dollar is going down. And I don't see any way out of this. The Fed is going to have to continue to print money and buy treasuries to monetize the US deficit spending. Let me know what you think about this. Hit that subscribe and like button. Hit the notification bell if you want to be notified whenever I post a new video. And let me know your questions and comments. Are you bullish on the dollar? Are you bullish on gold or Bitcoin or bearish on any of them? Let me know what you're thinking in the comments below. Thanks a lot for listening, and I'll see you in the next video.